How I gained interest even in being an investor was from my grandmother. She was somebody who worked as a maid. She never made more than $8,000 in her life. When she retired, she had probably $200,000 saved up in her lifetime, and partly growth in the market. In the 70s, she trusted that money to a stock brokerage firm and basically churned her lifetime savings into nothing. You go through an experience like that and realize there's got to be a problem with that system. What my grandmother inspired me to do is to actually be an investor. It took me a few years to figure out what may be the best route or method to serve clientele.
Prescott, Ball & Turben was one of the 5 biggest regional firms headquartered in Cleveland that managed assets for clients in various cities in the state of Ohio. Carnegie Capital Management Company was a spinoff of Prescott, Ball & Turben. They accumulated a substantial amount of mutual fund assets. The assets grew significantly, up to close to $1 billion under management. That worked perfectly until the assets grew so large that the individual brokerage firms decided to bring those assets in-house. So in the late 1980s, Prescott, Ball & Turben realized that they were going to lose all these mutual fund assets eventually. They decided, let's just get rid of it. Let's sell it. And so they sold it to George and David. Carnegie Management Company was now in a declining state. So to turn that around, George Mateo called me to set up the RIA, which is a registered investment advisory, and we closed down the mutual funds. We grew the assets of the RIA from essentially zero to several $100 million. George had a Crohn's and colitis disease. He basically came to me one day and said, "Jim, I want to retire from the business." So I said, okay, let's put the firm up for sale. We ended up with 3 offers. Richard Alt's and Gary Wagner's offer was not the top offer, but George and I both talked it over and felt that Richard and Gary were the best choice. One of the things that was so important about those two was their honesty, their trustworthiness, and their vision to build a bigger firm.
Richard Alt and myself, we took over the firm in April of 2009.
We knew if we took the reputation and experience at Carnegie, brought in the right people, we knew we could really continue to take Carnegie to the next level.
You know, if you look back when my grandfather was in the business, really they built custom portfolios. They didn't have all these myriad of products. And that has been driven by Wall Street. Wall Street has developed products that lack transparency, typically have high fees, and they're not serving the clients, they're serving themselves.
You call it the old school way, but still the best way. If you have enough means to build a custom portfolio, you should own individual securities, individual stocks, individual bonds. It's the only way you can control what you own. It's the only way you can control your taxes.
At Carnegie, our culture is centered around one key tenet, which is always putting the client first in everything that we do. I mean, that really boils down to our service philosophy of accountability, transparency, and responsibility.
We're kind of unique in the sense that we're large enough, but we still manage to a small scale and have very small client to portfolio manager relationships.
Putting client first allows the client to be completely at ease that his financial goals are the same as ours, which is to grow their assets in a way that is 100% transparent.
Today, we're just under $5 billion of assets under management.
We have 8 different offices across the country, from Philadelphia to LA to Florida. I still think we're in the early innings of our future growth. There's a lot of clients that need to be served in the right way.